The fragile balance of the global economy has been shattered. In a move that stunned markets and rattled governments across the world, President Donald Trump issued a stark ultimatum. China must obey American trade rules or face consequences unlike anything it has seen before. The demand, delivered through a sweeping executive order and fiery speeches, was framed as the only way to protect U.S. workers, industries, and financial supremacy. But Beijing did not bow. Instead, it retaliated with a thunderous response, a staggering $890 billion energy counterstrike that now threatens to upend the foundations of international trade. According to Bloomberg and Financial Times, Trump's order expanded existing tariffs and sanctions, effectively demanding that Chinese companies comply with U.S. export controls and financial oversight. The White House framed it as restoring fair trade, but critics said it was closer to an ultimatum. Trump himself declared at a rally in Texas, "China will obey the rules of America, or they will pay a price like never before." Behind closed doors in Beijing, however, the atmosphere was electric. According to South China Morning Post, senior members of the State Council, the People's Bank of China, and executives from the country's largest energy corporations gathered in a series of emergency sessions. The conclusion was unanimous. China would not submit. It would retaliate in the one sector where it holds enormous leverage: energy markets. And so came the announcement that shook the world. China revealed sweeping restrictions and strategic redirection plans covering oil, natural gas, coal, and rare earth minerals. Resources critical not only to the U.S. economy but to global industries ranging from aviation to semiconductors. The scale of the retaliation? Nearly $890 billion worth of energy trade flows would be shifted away from U.S. suppliers and dollar-based contracts, redirected instead to deals settled in yuan and euros with Russia, the Middle East, and Africa. This is not just a trade response, it is an energy shock of historic proportions, said a senior energy analyst speaking to Reuters. Beijing has weaponized its role as one of the world's largest energy consumers and suppliers. The fallout will be global. Almost immediately, energy markets convulsed. Oil prices spiked by more than 10% in a single trading session, the sharpest rise in over a decade. Liquefied natural gas, LNG futures, surged as traders braced for China to divert long-term contracts away from American firms. Coal shipments were abruptly halted, leaving U.S. exporters scrambling to find alternative buyers. And in perhaps the most symbolic move, Beijing announced new export controls on rare earth minerals, a group of 17 elements essential for producing everything from fighter jets to smartphones. Washington was blindsided. Treasury Secretary Janet Yellen held late-night calls with Wall Street banks, warning that the combined shock of tariffs, sanctions, and energy disruptions could trigger a financial hurricane. Pentagon officials, meanwhile, raised alarms about national security vulnerabilities if Chinese rare earth exports were fully cut off. For Europe and Asia, the timing could not have been worse. Already struggling with high energy costs, EU leaders now face the risk of shortages if China redirected flows to rival markets. Japan and South Korea, both dependent on Chinese intermediates for energy and tech supply chains, warned of severe national security consequences. And yet in Beijing, state media struck a defiant tone. People's Daily declared, "China will never bow to foreign intimidation. Energy is our shield, and we will use it to defend national sovereignty." As one Brookings Institution fellow told CNBC, this isn't just a trade dispute anymore. It's a declaration of economic war, and energy has become the front line. The moment Beijing unveiled its $890 billion energy counterstrike, panic spread through Washington like wildfire. According to Politico, senior U.S. officials were jolted awake for emergency late-night calls as oil and gas markets went haywire. Treasury Secretary Janet Yellen and Pentagon advisors huddled with Wall Street CEOs, warning that China's retaliation could cripple American industries dependent on energy imports and rare earths. Trump, however, doubled down. At a rally in Ohio, he thundered, "China thinks it can bully America with oil and gas? Wrong. We will crush their economy before they touch ours." But behind the scenes, Administration aides admitted the order had unleashed a global energy crisis far beyond what Washington anticipated. On Wall Street, the shock was immediate. Energy giants saw billions wiped off their market value, while tech companies reliant on Chinese rare earths faced sharp sell-offs. The Dow Jones plunged nearly 200 points in a single day, its worst decline in years. As one J.P. Morgan strategist told CNBC, "We're not just dealing with tariffs anymore. This is an all-out energy war." Europe, meanwhile, was reeling. Already weakened by high energy costs, the EU now faced an even harsher squeeze. Reports from Financial Times revealed that Beijing quietly redirected LNG contracts from U.S. suppliers to Russia and Qatar, leaving Europe scrambling to secure winter reserves. In Germany, industrial giants like BASF and Volkswagen warned of potential shutdowns if energy prices continued spiraling. In Brussels, tempers flared. Some EU leaders accused Trump of dragging Europe into a confrontation it could not afford. Others argued that siding with Beijing would fracture the transatlantic alliance. An EU diplomat described the mood bluntly to Reuters. "We are trapped between an American hammer and a Chinese anvil." In Asia, the ripple effects were just as severe. Japan and South Korea, dependent on both U.S. security and Chinese supply chains, urged restraint, warning that a prolonged standoff could destabilize the entire Pacific region. Yet in Beijing, officials showed no sign of backing down. State media praised the counterstrike as a measured but powerful response, insisting that China had no choice but to defend its sovereignty. As one Brookings analyst summed up, Washington wanted to make China obey. Instead, it triggered the largest energy shock in modern history. As the dust from Trump's ultimatum and Beijing's retaliation settles, the world is staring at the dawn of what experts now call an energy Cold War. According to Bloomberg Economics, the $890 billion counterstrike is not just a trade spat. It is a structural shift that could permanently reshape how nations buy, sell, and secure energy. The International Monetary Fund issued an urgent bulletin warning that if the confrontation escalates, global GDP could shrink by 2.5% in a single year, with the sharpest pain felt in energy-importing regions like Europe and Asia. The IMF's chief economist described the situation as a geopolitical shock to the energy system, with no quick way out. Energy markets remain on edge. Oil prices have surged to levels not seen since the Gulf War. LNG contracts are being rewritten in yuan and euros, and rare earth mineral prices have doubled in just weeks. Analysts at Goldman Sachs warn that U.S. defense contractors may face supply shortages within months if China restricts exports further. Meanwhile, Beijing is moving swiftly to consolidate support. BRICS nations, led by Russia and India, have welcomed China's push for non-dollar energy trade, with Gulf states quietly signaling interest in settling long-term oil contracts in yuan. If that trend holds, the petrodollar system, the backbone of U.S. financial dominance since the 1970s, may begin to erode. In Washington, hawks argue that the U.S. must retaliate with even harsher sanctions, while doves fear that the financial system itself could fracture. Wall Street analysts warn that global banking could split into rival camps, one tied to Washington's dollar, the other to Beijing's yuan. Ordinary people are already feeling the strain. In Europe, households face soaring energy bills. In Asia, fuel shortages are sparking protests. And in the U.S., inflation fears are rising as gasoline prices climb at record speed. As one senior European diplomat told Financial Times, "This is no longer a trade dispute. It is the weaponization of energy on a scale the world has never seen." For now, the question remains: is this the start of a global financial reset, or the opening shots of a long, grinding energy Cold War?